The E-mini keeps making all new all-time highs. Yesterday it tried to reverse down from parabolic wedge top, but no bear bars, and that reduced the chances that the bears would be successful. However, a lot of times when you have an attempt at a top and then the rally resumes, but it does not break strongly and start the market cycle over again, it'll try to form a second top. So you often get consecutive tops, and the second one has a higher probability of success. The daily chart had three strong gold days. This is, which is a lot, and it increases that chances that today will be some kind of a pause day, hesitation day, like a doji day, like one of these days, or like that. If the bulls get a strong breakout here, then the idea of a consecutive top goes away. Consecutive top means you try to top, the bulls make a new high, but not a strong bull breakout, and then you get another top. And if the bears succeed in doing that, the target would be the bottom of the most recent major high or low, which is here. We're in a bull channel, and we're not at the top of the channel, so there's room for more rally before there's significant resistance. The bears are hoping that this sell-off was a strong enough minor reversal so that they can get a major a higher high major trend reversal, a consecutive top, so one top and then a second top. But again, if we get a rally like this today, I would not look at any reversal as a consecutive top. I would look at it as something else. Can today be another big bull trend day? Sure, but we're getting pretty late in a channel, and channels usually evolve into trading ranges. 25% chance you get a bull breakout of a bull channel and then a start of an even stronger bull trend. 75% chance the market will work down to the bottom of the channel, whether or not it goes up a little higher first. Different ways to draw the channel. You can use that. You can do this. You can simply draw a parallel of that. I'm just trying to draw the bottom of the channel. Okay, that is parallel with that, or close to parallel with that, and that increases the chances that it is the channel that the computers will use for a target. All right, so we're trying to get a breakout above yesterday's high, and the bears are trying to get a consecutive top with yesterday's parabolic wedge, and therefore we have a possible early high of the day. A lot of times you need a second reversal from yesterday's high, so you reverse down below 1, and then you go up to a new high, and then you get a second reversal down. And for the bulls, right now they have a gap up on the daily chart. It's really fascinating how so much of the rally over the past week has looked like this. Small pullback bull trends where the rally does not go up a lot of points, but it's enough to make the chart on the daily chart extremely bullish. The odds are against a major reversal on the daily chart when the market looks like this without first getting a micro double top. So that means it has to sell off and then resume back up. And at that point, the bears would have a chance at some kind of a pullback. on the monthly chart so strongly bullish, such a tight channel, the first reversal down will be minor, which would be a test of the most recent major higher low, which now is here. This is, I forgot how many weeks, it's 46 weeks maybe, without touching the moving average. It got close here, but did not get there. So odds are we're going to come down here at a minimum. And that is about 80 points below where we are. Monthly chart, extremely overbought. I don't think it's ever been this overbought on the E-mini chart. 12 months without a pullback. So the odds are we'll get a pullback in the next month or two. The bars are about 70 points, 100 points tall. So that means the odds are we'll get, about a 100-point pullback sometime soon. But, I said that back here as well. The odds were that we'd get the pullback there. And yet we keep going higher. Only once in the past probably 50 years has the market gone 13 months without a pullback, and that was at the 1995 start of the biggest bull trend of the past 70 years, 80 years. And this is therefore not likely to go much beyond that. We're at 12 months now, and 1995 was 13 months. First bar of the day, doji, just like yesterday. Here we had small quiet days, yet rallied. Early low of the day. Yesterday, early low of the day. Early trading range, early low of the day. Now, can you sell below 2, betting on an early high of the day? The channel up from 31 is tight. The pullbacks are all small. The biggest pullback was here, about 2 points. That makes a reversal down without the market first going sideways a low probability bet. And so selling below 2, even if it's a good-looking bear bar, is not a particularly high probability short. And to buy up here, it's not a very strong rally. I like it, obviously, when a day looks like, I like the days like this. We have big swings up and down and like that and like this. But most of the days over the past month have looked like this or this, where, you get one swing and then sideways for hours. Here, we're rallying for the final half of the day, but only going up 2 or 3 points. So there's not much to do as a day trader, as there are when you have big swings. So always in long. Yesterday, I don't think we ever went always in short yesterday. And we're still always in long today. But a lot of traders want to buy pullbacks and not at the top of channels. Bulls trying to do what they did yesterday, doji bar, bull bar, and then rally for 10 bars. Probably will not be able to do the same as they did yesterday. If we get a bull close, some bulls will buy the close. Some bulls will wait to see if we get 3 or 4 consecutive bull bars, like yesterday. Some bulls bought the 2 close, others waited until the 4 or 5 close. And you can see on bar 6, a whole bunch of traders bought. And those were the traders who were waiting and then decided that we were going higher. They were waiting to see if the bears could get a reversal. And on bar 6, everybody decided we're going up. Similar to yesterday, a bull bar after a doji bar. Yesterday we gapped up and closed the gap on the first bar. Today we gapped up and the gap is still open. I don't think it matters either way. Yesterday I said that the gap was small and it would therefore have a higher probability of closing, and the same is true here. You can draw this as a parabolic wedge, but the bears need a decent sell signal bar. I often talk about a reversal down from yesterday's high, a second entry short, saying it's a higher probability than a first entry short. Sometimes it simply goes above yesterday's high, reverses down, and forms the high of the day without a second entry short. I'm going to open up my examples file. So here, I went above yesterday's high and just reversed straight down without a second entry. Same thing here, above yesterday's high and reversed down without a second entry. So you do not need a second entry sell. Sometimes it just goes above yesterday's high and reverses down. This pullback is already as big as the biggest pullback over the final 50 bars of yesterday. Unlikely to become a big bear trend day after a small pullback bull trend, but probably will not be another bull trend day. We've had 3 big bull bars on the daily chart, so that reduces the chances of getting a fourth. Also, if you start to get decent sized bear bars early in the day, it reduces the chances that today will be a bull trend day. It increases the chances that today would either be a trading range day or a bear trend day. It was always in long. Bar 2, will a lot of bulls buy the too low? I would not. Remember I said that we tried to top yesterday early, and if we did not get a strong breakout early here today, we probably would try to get a consecutive top, and that would have a higher probability of a swing down. 15-minute Globex chart, trying to get a bear breakout. And the day session chart, 15-minute chart, is just trying to get a reversal, final flag reversal. So what do? It's not a strong reversal. We have a very tight bull channel. Therefore, the first reversal down is probably minor, but it still could end up being the high of the day. So in other words, it could reverse down for 2 or 3 bars, bounce at yesterday's close in the moving average, and then try to form a lower high micro double top with 3 and become the high of the day. Okay, that's the biggest pullback in over 50 bars since bar 31. Are we always in short yet? No, I think the bears probably need at least a couple of bear bars. If they get 2 big bear bars, that would increase the chances that, in fact, we could get a bear trend day today. We had that last week over here. If you start to get 2, 3, 4 bear bars, you could get a swing down. Here, early big bear bars, swing down. Huge early bear bars, swing down. The bulls know that, and they will try to prevent 4 from being a big bear trend bar. They're trying to get an opening reversal up from the moving average for a high 2 bull flag. High 1 above bar 1, and then high 2 above 4. This is an important bar. It's already bad for the bulls, right? It's already bounced more ticks than what bad for the bears. It already bounced more ticks than what the bears wanted. Now you have limit order bulls who bought the too low, and they placed a limit order to buy more, 1 point lower. You have other bulls who placed a limit order to buy yesterday's close, other bulls who placed a limit order to buy 1 tick above the moving average. It's always useful to know whether or not limit order bulls can make money in what could be a bear trend. The easier it is for the bulls to make money, the more likely the bear trend will not go very far and become only a bear leg in a trading range. And those bulls need the market to get above that too low to make money. And the bears know that, and the bears are trying to stop the bulls. They're trying to sell here, preventing the bulls from making money. And then the bulls will have to sell out on a reversal down. So if 4 does not go above the too low, there will be trapped bulls who will have to sell out. Do I think it's going to go above the too low? Of course. We have a small pullback bull trend. First reversal down, usually not major. For the bulls, high 2 buy, opening reversal up from the moving average, tight bull channel since 31. But to me, the picture looks confusing. We have a doji bar, trading range bar on bar 1, up on 2, down on 3, so reversal down, down on 3, up on 4, so reversal up. This looks like it may be the start of a trading range open, like this, or more like this. Can the bears sell here and sell more above 3, betting against a big bull trend, betting that 3 did enough damage so that a trading range open is more likely than an opening reversal up in a bull trend? I think that's true, but I don't know if the probability is enough to make the trade worthwhile. You have to deal with risk and reward also. Best choice right here, wait, especially wait to see if we get a second entry short. That would be a higher probability short. So, some kind of a double top up here, higher high, lower high. First entry, second entry short, tried to rally but could not get above the high of the day, and we sold off. So that's what the bears would like: a first entry and a second entry short for a swing down. First entry short, second entry short, small swing down. It remained the high of the day all day. First entry short, maybe second entry here, maybe second entry here, and the bears got a swing down. First entry short, second entry, or second entry, a little bit of a sell-off. Tough buy, right? Opening reversal, possible low of the day, and therefore the math is okay for the buy. But, bar 1, we went up and down on 1, up on 2, down on 3, up on 4. It's more likely going to be a trading range open. And I would wait to see if we get a second entry short around the high of the day, or we come down and we get a micro double bottom with the 4 low. Now, what about the bears who did sell? I don't understand the basis of their sell. I would not sell below 2. It's a bull bar in a small pullback bull trend. It did not go below a bear bar, 3. So I think there's no good reason to be holding short right now. This is interesting. The bulls are getting their opening reversal up from the moving average. The small pullback bull trend means that the bears will need at least a micro double top. the context here is good for the bears to get that micro double top. So if we do get a reversal down on bar 6 or 7 with a decent sell signal bar, it would be a reasonable short for a second failed breakout above yesterday's high. And the bulls were hoping that, and this was simply a test of support, the moving average and yesterday's close and the start of a big bull trend day. The bars are good size, which is, it increases the chances that we'll get some kind of a swing up or down. But while it's a reasonable buy for the low of the day, with a rally having so many pullbacks all the way up and decent selling here, I think it's probably better to wait to see if we get 2 or 3 consecutive, or 3 or 4 consecutive bull bars, because I think there's an increased chance that we're going to get a second failed breakout above yesterday's high and a bigger move down. But the bears need a good sell signal bar. They need a bear bar closing near its low, having at least a 2 or a 3 tick bear body. Always in long consecutive bull bars, plus it never went always in short on 2. But tail on the top of 5 could not close above 3. And yesterday's rally, even though it was a small pullback bull trend, was not very strong, did not cover a lot of points. The bears were trying to get a second failed breakout above yesterday's high, with 4 and 5 being decent bull bars. The bears will need a decent sell signal bar here. So maybe at least a 3 or a 4 tick bear body closing on its low down around the 5 low. If they get it, it's a reasonable short. If they don't get a pretty good bear bar, a lot of the bears will not take the short and simply wait. And for the bulls, it's like yesterday, we're going up, but it's not all that strongly bullish, and a lot of bulls would rather buy a bigger pullback than the breakout. So even though we have an opening reversal buy signal, bar 4, here we are with only a 5 tick rally, a 5 tick trap. So not strongly bullish, not strongly bearish. Yesterday, a lot of very quiet trading. Today probably will be mostly a trading range day. Okay, the bulls got a third bull bar, even though 5 has a tail and 6 is a doji. It's still a third consecutive bull bar, and we've only had 1 bear bar so far today. So the odds favor at least slightly higher prices. Now, selling below 6, yes, is a second reversal down from above yesterday's high. But usually, if you're going to get a swing down, you need a decent sell signal bar. And 6 is not a good sell signal bar, and therefore it's a low probability sell. We tried to get a parabolic wedge rally yesterday. We might try to get another small wedge top today, so we may get a third push up and then a reversal. All right, let's say we got a bear I7 closing near its low. Still a reasonable sell for the second entry. Failed breakout yesterday's high. It's never a high probability sell, but it's certainly a reasonable swing sell. We might get one more push up, 4 or 5, strong enough so that we may have to get a wedge top. So 1, 2, and then maybe one more high for a wedge. And what about the bulls? While we're always in long, I would get out below 7. And theoretically, you have to buy again above a bull bar. So if it goes below 7 and then above 6, theoretically, or above 5, theoretically the bulls have to buy again. But I would wait. I think it's more likely that we're going to get some kind of an early high here, either from a second entry short or possibly a small wedge top. You know, yesterday never looked very strongly up, but rallied for 50 bars. And this is not strongly up, but until we get a clear, strong reversal down, bulls will keep buying. It's still always in long, so it's still slightly more likely to go at least a little higher than it is to reverse down and be the high of the day. 4 or 5 strong enough to make it slightly more likely that we'll go a little bit higher and get a wedge top, but it's still reasonable to be short here. And for the bulls, they see 8 as a pullback from the 4 or 5 reversal. 4 or 5 big enough, so it's more likely that we're going a little bit higher before we go down. But right now, I think the odds are we're going to get an early high. Small pullback bull trend, unlikely to become a bear trend, more likely to become mostly trading range. Market's deciding, does it go up for one more new high and then a wedge top, or is this the high of the day and will we start to get a series of bear bars? It's a reasonable short. It's also reasonable to wait to see if we do get a series of bear bars or one more new high. Just the size of this bar alone increases the probability that this is the high for the next hour or two. Still always in long, but one more big bear bar after bar 9 could make it always in short. Another 18 minutes before the 60-minute bar closes, and the bears are trying to get a sell signal bar. Very tight bull channel, so if we do get a reversal, probably a trading range, maybe down to the bottom of the most recent major high or low down here. And that is this low from yesterday. Will the bulls buy the moving average again for a double bottom 3? I don't know. I think this bar is big enough to make it slightly more likely right now that we've seen the high of the next couple of hours. If it closes down here, that would make it, I think, better than 50-50. So even a single bar here would be enough to make it always in short. If it has a 3 or 4 tick tail, it would increase the chances that instead we'll go sideways. Good bar for the bears. The bulls still want a double bottom at yesterday's close, the moving average, the 4 low. But right now I think it's slightly more likely that we've seen the high of the next couple of hours, so I think we're probably always in short. Suppose we get another bull bar on bar 10. Well, I think the bears will get out if it's a strong bull bar. The bears need to do a little bit more before traders are convinced that we're in a swing down. I think right now the alternative is swing down or trading range. I think a bull trend is less likely today. We have 2 big reversals down from yesterday's high. Even though no follow through, it's enough, I think, to make a bull trend day unlikely. It's fairly common if you get a swing down for the market to come back and test the entry price. So we may bounce up to around the 7 low. Also, you have limit order bulls who bought the 7 low, 1 point lower, and they're buying more, trying to get back up to the 7 low so they can get out break even on their first entry, and then with a profit on their lower entries. So and when it gets to the 7 low, they sell, and the result is that the bulls are selling around their original entry price, which is also the sell entry price for the bears. So you end up with a breakout test. The bulls are selling out at that price, and the bears know they made money selling at that price earlier, and they're going to sell again. Also, they're selling, trying to prevent a reversal up. So I think we're always in short, even though it's only 1 bar 9, it's a second reversal from yesterday's high with a decent sell signal bar 7. If it's a decent size bull bar 9, bar 10, a lot of the bears will get out above, but they'll look to sell again below a bear bar. Can the bulls buy above 10, betting on the low of the day, double bottom, low of the day? If it's a strong bull bar, if it closes on its high, they can, but right now I think it's more likely that we've begun a swing down than it is that we're beginning a swing up. Is that enough to make bulls buy? Is it enough to make bears give up? It's confusing, right? We've had a double top, now we have a double bottom. It's a trading range open. I think it's slightly more bearish than bullish. The context is good for the bears. The bears have a decent sell signal bar. If the bears do get out above 10, they'll sell again below a bear bar. And for the bulls, I don't think the buy setup is strong enough to take the buy. I would wait to see if we start to reverse up strongly and then buy higher. Everyone wants clarity, but a lot of times it takes a while to get it. Getting near the end of the first hour. Right now it's a doji bar. We're near the open of the hour, but it would not take much for it to be a bull bar closing on its high, and it would not take much for it to be a bear bar closing on its low. The range so far is fairly small, and we're in the middle. Stop for the bears, either above 7 or above 5. A lot of the bears get out above 10 because it's a reasonable buy. And for the bulls, their stop is obvious below 10. So if we go below 10, might get a fairly quick measured move down. You can see 11 high is exactly the entry price for the bears who sold below 7. And the limit order bulls who bought at that 6 low, 7 low, right now are trapped. They needed to get above that 6 low. Weak entry bar for the bulls who bought above 10, but right now the market's deciding over the appearance of the 60-minute bar, and I think we still do not have clarity. I think it's slightly more bearish than bullish, but we're still in the middle of a trading range with both the double top and a double bottom. So it's not high probability yet. Is this a breakout mode pattern? We went above the high of 1, reversed down twice. We went below the low of 1, reversed up twice. The pattern has at least 10 bars. Here it's already breakout mode with bar 4. We went to a new high, reversed down, new low, reversed up, but it's only 4 bars. Usually a breakout mode pattern is not reliable unless it's at least 10 bars, which is what we have right now. And breakout mode means bulls will buy above 5 for a measured move up, bears will sell below 10 for a measured move down. As I said, even though we're still holding above the moving average, we have a second entry short above yesterday's high with a decent sell signal bar, so I think it's slightly more bearish than bullish. 20 seconds left. Will the 60-minute bar close on its low and have a higher probability that it will function as a sell signal bar, leading to some kind of a swing down, or will it have a big tail on the bottom? Close near the low, and but a very tight bull channel. So if we do reverse down, which I think we will, the reversal probably will be minor. Sometimes in a bull trend, you get a sell signal bar, but instead of the market going below the low, it goes above the high, which is what the bulls are hoping will happen here. But, I don't think a lot of traders will buy above the high of that bear bar. So right now I think a lot of the bulls will not buy above 5 high of the day. They'll wait to see what the breakout looks like. For the bears, it's a sell below the double bottom, but lots of reversals in here lowers the probability of a big trend day up or down. Once you're in a trading range and you have 3 reversals up or down, it's a triangle, and we have 3 reversals down. So if you want, you can call it a triangle. Breakout mode. When you have breakout mode, 50% chance the first breakout fails, 50% chance it goes for about a measured move down or up, and 50% chance when you get a successful breakout, it'll be up, 50% chance it'll be down. You can see we have an obvious sell signal bar on the 60-minute chart. In an overbought market, and therefore it's a reasonable sell, but the channel is so tight, it's a minor reversal. So the bears selling here are not looking for a bear trend. They're looking for, 2, 3, 4 bars down, maybe to this higher low. That higher low is this low from yesterday. Bulls looking for a second entry buy, but they need a good buy signal bar, bar 13. The bears were likely to get a second leg down after 9, and 13 qualifies. Second legs are usually sideways or down, and this is sideways. But to buy above 13, a lot of the bulls will need at least a 2-tick body. The bears who did not get out above 10 probably will get out above 13 if it's a bull body. That would be a triangle and a second reversal up from the bottom of the developing range. And we're still above the moving average. So I think the bears should get out above 13 if it closes on its high. All right, bulls could have closed it on its high, yet instead 2-tick tail on top. So still breakout mode, still confusion. It makes it hard for the bears to decide what to do. Do they get out above 13? I would, simply because we're above the moving average, and this would be the 3rd reversal up and the second leg down after bar 9. The bears have had a lot of opportunity to get their breakout, and they failed here. I would get out above 13 and then sell again below a bear bar, like below the 9 low. For me, not strong enough to buy. We got 4 bear bars closing on their lows in an overbought market after a weak rally. The odds slightly favor down. Limit order bulls who bought the 6 low need one more tick. This is a fairly, that's a good bar for the bulls closing out on its high. This is a fairly decent breakout mode pattern. We've had a decent, strong reversal down and a strong reversal up. So you have trapped bulls and bears. That increases the chances that we get the breakout. The pattern has lasted more than 10 bars. The range is about half of a typical recent day's range, maybe a little bit less. It's really fascinating that the bears are trying hard to keep the limit order bulls from making money. Can you front run the breakout and just sell right here or below 15? Obviously you can, but until there's both a strong breakout with strong follow through, the probabilities are not high for the bulls or for the bears. For example, if we break above the high of the day and get a strong reversal, that would be a reasonable short. If we break below the low of the day and get a strong reversal up, that would be a higher probability buy. But in the middle of the range, buying above 10, selling below 12, selling below 15, the probabilities are not yet high. This is similar to that day last week where we had the second entry short and then a reversal up, but it failed to get above the high of the day. I think it was last week. Yeah, here, second entry short, first entry, second entry, a reversal up, and it failed to go above the top of the sell signal bar, and then we got a swing down. So far it's similar to this. Higher probability, you wait for the breakout or you wait for a series of bear bars and then sell closes. Can you simply sell right here and put a stop a tick or two above 14? That's one of those situations where the risk is very small. So you sell right here at 27.5, one tick worse than the bears who sold below 7. You're risking maybe 3 ticks or so to make 3 or 4 points down, a measured move down. Whenever the risk is small like that, the probability is low. The bears, I think, the bears who sold below 7 for the swing, their stop is still above 5, maybe above 7. Breakout mode, apex of a triangle, and the probabilities are not as high as anyone wants, but the math is still okay, both for the bulls buying above 13 or above 14, or for the bears selling below 7 or below 16. Again, higher probability after we see the breakout below the low of the day or above the high of the day. Went above 1, reversed down, below 2, reversed up, above 4, reversed down, below 6, reversed up, above 10, reversed down, below 11, reversed up, right? And so that tells you that stop order trading so far has been bad. Every breakout has only lasted a bar, maybe 2 bars. But the bulls still hope 17 is simply a pullback from their 14 breakout above a triangle, and the bears are hoping that it's a low 2 short after their reversal on 9. But until we get consecutive bars up or down, consecutive decent bars up or down, the probabilities are just not all that high. Bears look like they're trying to get their break below the 60-minute low, which is a bear reversal bar. The bulls have bought repeatedly here, so it's a key price. Will they buy again, or will they give up and buy lower, like around the measured move down? Hesitation, so even though a little bit more bearish than bullish, the bulls are still defending their stop below the low of the day. Three bear bars, good for the bears, but they need a strong breakout below the low of the day. Otherwise, this is just a bear leg in a triangle. Can the bulls buy above 14, the lower high, or do they have to wait for the breakout above 5? Well, to me, everything is reversing, and the probability for any trade is not very good. Reversing repeatedly every 1 or 2 bars all day, and the range is getting tighter, so we're at the apex of a triangle. $15-minute chart, 7 bars sideways. Every bar is overlapping, 7 consecutive bars, breakout mode. 15-minute chart, not a good buy signal bar. Decent bear bars closing on their lows. So in terms of stop entry setups, the sell setup looks better than the buy setup. That's back to the Globex. Do I still think it's always in short? I still do, and we still are on that second entry short below from above yesterday's high, and we've had some decent bear bars today. So even though we're holding above the moving average and the bulls keep getting bull flags, I still think it's slightly more bearish. Do I think it's like 60%? Of course not. If it was 60%, we would be racing downward. Everyone would agree that it's very bearish, but I think it's slightly better than 50-50. However, it would not take much for the bulls to take control. 18 is another chance for the bulls. A bull bar closing on its high just above the moving average. Bulls keep buying at the low of the day, trying to form a triangle for the low of the day. They're trying to keep a gap open between yesterday's trading range and today's trading range. But a triangle late in a bull trend usually becomes the final bull flag if the bulls get the breakout. We can get a wedge top 1, 2, 3 if the bulls get their breakout. Can you sell on a stop 1 tick below? I think it's probably okay, right? Maybe it's slightly higher than 50-50 chance that we'll get a swing down. The bears from the 7 low are still on their short, and therefore they're looking for a 4-point swing, and that means 17 or 18 ticks below, which is right down here at the 76 low, this double bottom. Bears getting their breakout. You can see a whole bunch of buying, right? The bulls are trying to make the breakout fail. That triggers the sell on the 60-minute chart, and bulls are trying to get a failed breakout and a quick reversal up. If the bears can get 2 ticks, 3 ticks below 13, that increases the chances that they'll get a swing down. For the bulls to buy on a stop above 21, I think they would like to get a bull bar, and a decent bull bar. The market's deciding, are we going to get a second tick below, increasing the odds of the market falling 17 ticks below 7 down to here? Or will we only get a 1 tick breakout and then a reversal up, increasing the chances that we'll then get a breakout above the high of the day? Remember, these breakouts, 50% chance they succeed, 50% chance you get the reversal. Bad entry bar for the bears and bad buy signal bar for the bulls, but slightly more bearish than bullish. You often hear me say by bar 18, 90% chance we've seen either the high or low of the day. Is that true here? It might be a little bit less because the range is so small and therefore the high is not too far. A lot of times you'll get a 1 tick breakout below the 18 bar range or above the 18 bar range and then a reversal, and then this becomes the low of the day. And that's what the market's deciding right now. Breakout below the 18 bar range, ultimately reversed up. Breakout below, ultimately reversed up. Breakout below. This is kind of like today. A 1 tick breakout below the low of the 18 bar range, and then we reversed up to above the high of the 18 bar range. Same thing here, 1 tick breakout. I'm going to move these. These are really not failures. These are failures where it goes 1 tick below and that becomes the low of the day. 1 tick below becomes the low of the day. And that's what the bulls are hoping to get today. Will stop order bulls buy above 22 if it's a bull bar? Some will. A lot of traders are simply waiting for more clarity. The bears can argue that even if it goes above 22, it's still a bear channel with lower highs. However, the bears should not allow it to go above a bull bar after a 1 tick failed breakout. With this 1 tick breakout, we had much bigger swings, and there was therefore potential for a bigger swing. And the bulls got a reversal up. They either buy above the bull bar or after 2 or 3 bull bars. Here we had a very sharp reversal up, made it higher probability that we were going to continue higher. We know some bulls will buy there, but it's not strongly bullish, it's not strongly bearish. A lot of the bears will get out there. Others will keep a stop above 14. So to me, it's still not all that clear. It's still not high probability one way or the other. Becoming always in long. The bulls need bull bars. They need strong bull bars, big bull bars closing on their highs. They obviously need to get above the 14 lower high, but the bears should not have allowed this. They should have gotten more than a one tick breakout, and they should not have allowed 22 to be a bull bar closing on its high. Probably always in long, but probably not going to be a big day. On these other examples where we got a one tick bear breakout that reversed up, it rallied for the rest of the day, but did not cover a lot of points. It still remained a small day. Here, trading range, one tick breakout below the 18 bar low, and the rally did not result in a bull trend day. It stayed a trading range day. This is the end of the second hour, and on the 60-minute chart, the first hour is a sell signal, so this is the entry bar, and this is a terrible entry bar for the bears so far. There's still a minute left, and it's still possible it could close on its low and be a better sell signal bar, but right now it's a bad, sell entry bar, but right now it's a bad entry bar. And for the bulls, it's a high one bull flag. We have a bull trend, a pullback, bull breakout, a pullback, but it's not a particularly good looking buy signal bar either. It's basically a bull doji, and it's after a bear bar. That means the 60-minute chart looks like we're not going up very far today either. 5-minute chart does not look like we're going up very far if we do go up. Now, who's going to sell below 24? For the bears, it's a bear channel. We have a lower high, maybe another lower high, maybe a double top lower high, and we have a new low. So it's an early bear channel, but I think it's slightly more bullish than bearish because of the one tick failed bear breakout, and now a decent buy signal bar, 22, and a decent entry bar. But the bulls really need to get consecutive bars, one or two more decent bull bars before traders believe we're going to go above the high of the day. The range so far is only 3.5 points tall. So 98% chance or something that the range is going to be bigger. That's too small. If you look back at the daily chart, for the last time a day had only a 3.5 point range, you'll discover that there probably is one every 5 years. Is today going to be that one? Probably not. That means we're still either going below the low of the day and make the range bigger, or above the high of the day and make the range bigger, or both. A lot of times when you have a very small early range, the market will break below the low and above the high, and sometimes it'll do it 2 or 3 times. So sometimes it'll go to a new low, a new high, and then a new low again. Remember, the bears have a channel as long as the market's making lower highs, and therefore it's important for the bulls to get above 14. Again, even though we're always in long, I doubt this is going to be a big bull trend day. And I'm still not even convinced that we're going to the new high. I am convinced that we're either going to go to a new high or to a new low. But and it's slightly more likely that we'll go to a new high, but it's not, the probability is not all that high. The bears are going to try for the double top. If the bulls break a couple ticks above it, then we'll probably go to a new high. For the bears, still a double top, lower high. Whenever you have a tight trending range and you have a double top like this, and if you have a decent sell signal bar, let's say 28 is a bear IOI, you have a 40% chance of a swing down. So it's a type of double top, lower high, major trend reversal. Bears trying to get a bear sell signal bar with 27. The probabilities are just not high for the bulls or for the bears. The bears who get out below 7 is theoretically still on that sell for the failed breakout above yesterday's high, and theoretically they have to get short again, for example here. But it's so neutral that it's probably better just to be flat and wait. For these double top lower high major trend reversals, sometimes it'll go 1 tick above, but it should not go 2 ticks above. If it goes 2 ticks above, then the bears need to look for another pattern. I am flat right now. To me, it's slightly more bullish than bearish. The bears had their chance, bar 21, and failed. And the bulls are trying now to get a new high of the day. But like I showed in those examples, whatever rally we get probably will not be all that big. Another 1 tick bear breakout, we got a new high, but the day's range still remains small. And it barely broke above the prior high, and it took all day to get there. So the odds are against today being a big day, up or down. I said that on the before the open, that after several strong trend days, it's unlikely to be a big bear day, and the bulls probably will not buy aggressively. So today would probably be a rest day or a pause day. Bulls trying to get that new high. Again, while it's possible we could get a big breakout, I think the odds are against a big day. The range is still only 3.5 points, and chances are it's going to get 5 or more points. So chances are we'll go a couple points above the high of the day. Can you sell a reversal down here, betting that we've still seen the high of the day? I would not. While the 18-bar breakout traders can argue we still haven't gone above the high of the day and therefore it's still short, I would not argue that. I think it's more likely that we're going higher. The day's range is 3.5 points. A very small range day would be 4.5 points. So we'll probably go at least 1 point above the high or below the low. And right now it's more likely that we'll go above the high. And put up that indicator for small range day. Okay, right now the day's range is 3.5 points. Okay, let's just look back over the past many years to see the last time we've had a 3.5 point days range. So this is today, 3.5 point days range. Let me do this so I can show a lot of days. And the last time we had one was more than 3 years ago. So it's a once every 3 year deal. And then the last time before that, who knows how long, but a lot of years ago. Okay, so here, and then 3 years ago, and then 7 years ago, back in 2010, and then before that, none. So here's 14 years. So in the past 14 years, there have been only 2 days as small as today. So the odds are today is going to be bigger. Location, good for the Bears, but the Bears had their breakout, so I still think the odds are we'll get a new high of the day. The Bears who sold below 7, they keep their stop above, well, theoretically they do. I think most Bears are out. They get out above 22 or 10 or 13. If they get out here, they might go short here again, but I think they get out here. And for the Bulls, this is, I think, not yet enough to make them get out. So it's still slightly more likely that we'll get a new high of the day than it is that we'll get a new low of the day. But not much to do. I would either be still long or I'd be flat. What about a second entry short below 36? I would not. I still think we're always in long. 98% chance the range is going to get bigger, and the Bears tried to make it bigger at the low of the day. This is one of those funny days when you look back at it, you say, it went to a new high of the day above 1. Oh, it went to a new low of the day on bar 3. Oh, a new high of the day on bar 5. A new low of the day on bar 21. So it's already made multiple new highs or lows, and it probably has to make at least one more. What are the chances of this becoming a trending trading range day? It's always possible, but I think more likely it's going to be one of those days that just keeps making new highs, new lows, new highs, new lows. So even if we break above the high of the day, I doubt we'll go very far. Right now, we've probably seen the low of the day, because the range is so small. I don't want to say 90% chance, but maybe 60% chance. And today's probably going to close around the open and not only be a small day, but be a doji day, similar to this day right there. That is September 19th. Here, closed near the open, made a new low, made a new high, closed near the open, and the range was small. Range was, looks like 4.75 points. So this is probably going to be a day like that. Odds are the range will become at least a couple points bigger. Usually days are at least 5 points. Small chance we may get a huge surprise breakout. If we do, a trending trading range day is more likely than a strong bull trend day, because the market has had so little energy here and here. So it's unlikely to find a lot of energy at any point today. I bought above 22, hoping to get 2 points, and I need one more tick. It's hit the magic price several times, but unfortunately it's also at this high. I could try to get out with 7 ticks instead of 8 ticks. 90 to 95% of days have at least one 4-point swing trade, one trade that goes 17 or 18 ticks from a good signal bar. But this has a higher chance of not being one of those days. It has a higher chance of being one of those 5 to 10% of days that do not. Well, I'm flat. Normally, as I said, 90-95% of the time, I would expect a 4-point swing coming off a decent buy setup, 22. But today's range is so small, I don't think it's a 90% chance. I think it's more like a 50-50 chance. For the Bears, double top 5, second entry short, 40, third entry short below 44. But small pullback bull trend from 21, and I would not get short. I got flat because I was suspicious that we might not get much more than 2 points. Still always in long, still holding above the moving average, but a lot of traders like me don't want to buy high unless there's much more momentum going up. It's possible that this will end up like that day a couple of weeks ago that I showed earlier. And we just do this the rest of the day in a very narrow range. This is what the bulls are hoping for, that we reverse up and stay above the moving average and then eventually start to get a series of bull bars and maybe a late rally. One big difference is this started around 9:30 and we're right now near 10:30. The longer you are into the day without much momentum, usually the less likely you're going to get much momentum. Big trends usually start in the first half of the day. And right now we're already at 10:30, 4 hours into the day. And when you have a tight range and then a breakout this late in the day, usually you're not going to get much of a move. Maybe a couple points or something. Doesn't matter that it's a wedge. The day is so quiet, the probability of making money, buying or selling, is small. And I'm back to flat. The location is good for the Bears here at the top of a training range day. And sometimes days make repeated highs and lows like that, but I'm flat. New high, new low, new high, new low, new high. But the legs here were much bigger than the ones we have today. Bulls hoping for a measured move up. The range right now is still 4.75 points, which is still small, so we'll probably get a little bit bigger. It's possible that we trend up for the rest of the day, but we're pretty late in the day, and I think we probably will not go much more up. That makes, I think, a lot of bulls feel the same way, so they're hesitant to buy up here. And small pullback bull trend, like yesterday, so difficult to make money selling, even with limit orders at the prior high and scaling in higher. We'll probably get a minor reversal down late in the day, but probably not much of a reversal. when you get these many new high, low days, usually it's rare to get more than 4. So new high, new low, new high, new low. So it's already 4. So the odds are small that we'll go all the way down to the low of the day.
UK Independent.
We might get our 4 points, right? 27, 4 points would be 17 or 18 ticks. That would be 2 to 3 ticks above where we are. It looks like we're going to get there. We may get more than that, but I think it's unlikely. So right now the range is 5 points, and you usually get a few days a year with a 5-point range. And we have a breakout, and we have potential target based upon the 23 high. So we're probably going at least a little higher, but probably not much higher. And I think at the end of the day, we'll get a pullback, but I don't think it'll be a big enough reversal for traders to make money. I'm going to close that out and reopen it. Okay, new low of the day, new high of the day, new low of the day, new high of the day. 4 reversals, and the reversal down from the 4th is not all that big. This one started at 10 o'clock, so it had time to fall. This one started late in the day, and the pullback was not much. 1, 2, 3, 4 reversals, and the final one was not much. I think this might be what we get, a very small pullback late in the day. 1, 2, 3, 4 reversals, did not get down to the low. New low of the day, new high, new low, new high. Here we had an unusually big sell-off, but we also had many strong legs up and down earlier in the day, and that increases the chances that you can get another big leg. This is not likely today. This is probably more like today. The best the bears will probably get is a few bars down, and it will be hard to make money. I can draw a wedge this way as well, but it's a small pullback bull trend. This breakout is a surprise big enough for at least a small second leg up, and therefore the probability of this short is small. Second entry short, failed breakout, but small pullback bull trend like yesterday. Odds are against much more down. Bulls have a gap, 65 high, 43 low, but very little momentum up, and therefore not likely to go up for a measured move. Not a good sell signal bar, 66 or 68, and small pullback bull trend. So, I personally am flat. To me, I doubt there's going to be much more up. I doubt we're going to get much of a reversal. I said earlier that we might get back to the open of the day, and the daily chart may end up being a perfect doji. That's the one thing that the bears have going for them. It's a trading range day, and this is probably a bull leg in a trading range day. It might last until the entire day, but there's always a magnet at the open of the day, whenever a day is mostly a trading range day. That does not mean I would short. I did not short. I'm flat. It simply means that we might pull back to the open by the end of the day. high 2 bull flag at the moving average, always in long, but probably not much momentum in the market, and therefore even looking for a 1-point profit may be too much. The probability might be high enough. We have a 5-point range, and that is kind of a minimum. You get several 5-point days a year. Let me highlight the 5-point days. So I'll put a big pink circle over all the days where there's a 5-point range at the end of the day. So we had one here, and then another one here. So we've had 2 this year. We had none last year, and then 2014 we had 4. So none in 2015 or 16, but then 4 before that. And it looks like 2 or 3 a year. Sometimes you go a couple of years with 0. Here the range is very big. So anyway, today's 5-point range puts it in a more common group of ranges, while still unusual. This is the 3rd one this year, and so it's not so unusual, and therefore the bulls may not need to go any higher. It looks to me like they probably will get a little bit higher. I doubt they'll get a lot higher. They have a small pullback bull trend. You can see yesterday in the final few bars we got a little pop up. It's possible that we'll get a little bit more up. We have a channel here. 1, 2, 3. We have another channel top up here. It's parallel to this channel, and that increases the reliability of this trend line. We have a couple ways to draw measured moves. From the low, we tried to top out here, and we're almost to that measured move target, but we have a big gap between this low and that high, and therefore we have a target even higher above up there. Small chance it will accelerate up. You can see the range just became a little bit bigger. It's now 5 1/4 points, and there's no sign of a top, so it probably will get a little bigger still. Still a chance it could reverse down to the open, so we may get a brief sell scalp, but I think it'll be really hard to take because the pullbacks are so small. 2 ticks, 1 tick, 1 tick, 2 ticks, 2 ticks. That's 18 ticks above 22. So the bulls who had more patience than I had ended up with 4 points instead of 2. The trend line is not enough reason to sell. Small pullback bull trend, strong breakout. The question is whether it's going to be by the close. And it is by the close right now, but I'm probably not going to do it because the day has been so quiet. We're up to 6.5 points now, so now we're getting into a more typical daily range. Whenever you get the biggest breakout in a bull trend in more than 20 bars, there's a higher probability that it's an exhaustive end of the trend than the start of a new leg up. However, it's a small pullback bull trend since 21, and I think it's a really low probability short this late in the day. So I would let it go. The buy close bulls who bought 73 or 74 right now are worried that they bought the top of a buy climax at the top of a channel, and they should be worried. However, the legs up and down have been small, and there has not been much momentum, and that makes it unlikely that we're going to go down very far. So I would not take the short, and I did not buy the breakout, so I'm flat. I thought about buying above 71 and chose not to do it. In hindsight, it's always clear that it's a high two bull flag at the moving average, always in long, small pullback bull trend, but very quiet day and not much room up to a reasonable target, so I let it go. So for the bears, an exhaustive buy climax, but it's a small pullback bull trend. I would not take the short. I would just wait for tomorrow. I think better to wait, especially this late in the day. The bears are trying to get a reversal, 60-minute chart. It looks like we're rounding over. 3 pushes, spike, second push, third push, near a measured move. We got to within a point of that. But even then, with the channel this tight, unlikely to have a big correction. We'll probably do this for the next couple of days. So maybe pull back here, maybe pull back here. Very, very small pullbacks past several days, 1, 2, 3, 4 days without much of a pullback. Obvious target would be the deep pullback here. We have a wedge. Usually when you get a wedge and you have an obvious major higher low, it takes at least a couple legs to get down there. And very often you go halfway down and then sideways for a number of bars. Let me turn this into a 15-minute chart. So let's say this is a reasonable target, and it is 3 pushes, 1, 2, 3. A lot of times you'll get about halfway down, which would be the tight trading range at the beginning of today, and then sideways before you get here. Not a lot of immediate downside risk. I've seen this kind of behavior many times in the past, where the market goes up in a small channel, but not a lot of points, and there's really nothing in terms of swings up and down. There's one trade, like today, and like yesterday. Yesterday we had 3 trades, 1, 2, and 3, but very little trading. And sometimes you get an extreme buy climax, a big breakout, 20 points, 30 points, that marks the end of it. It's possible that this is the end of it, but small pullback bull trend, it's a low probability bet for a short. Also, the first reversal down probably will not get very far. Small pullback bull trend, 60-minute chart. Usually has to transition into a trading range, and then the bears will try to get a major trend reversal. Here we got a surprisingly big drop. Well, we have to go back a long ways to find something as extreme as what we have right now in the 60-minute chart. Here, it usually has to go sideways before you get any meaningful 50% type of correction. This is kind of like what we have. The best the bears usually get is sideways for 10 bars or so, a couple legs sideways to down. At that point, they have a chance at a 50% pullback. Same kind of thing here. Sideways rather than much down. about 20,000 contracts in the final few seconds of bar 78. Another small pullback bull trend. We're getting a whole series of them, and you can see the result is a small pullback bull trend on the 60-minute chart. Unlikely to go down very far without first going sideways. Daily chart, another day closing on its high. The bars are shrinking, a little bit smaller here, a little bit smaller there, but still strongly up. And the bears probably will need at least a micro double top, which means that the best the bears probably get for at least the next couple of days is sideways. Here's a micro double top, up and then down and up. And this is probably the best the bears get over the next couple of days, a one-day pullback. Weekly chart, still going up. No sign of a top. You can argue 3 pushes, 1 pullback, 2 pullback, 3. Monthly chart, I think, is the most extreme chart right now. We have 12 bars up, and that's only happened. That's never happened. I think you can check, but I think it's never happened in the 18 years of the E-mini, 19 years of the E-mini. I don't think there's ever been a series of 12 bars without a pullback. And I mentioned the only other time that I remember this in my trading career was back in 1995, where we had 13 bars without a pullback. And that was the start of a huge bull trend. And this is late in a bull trend. And whenever you see exceptional strength late in the trend, it's more likely an exhaustive end of the trend than the start of a even stronger bull trend. So let me put up the cash index. Here is the 1995 rally when the Republicans took over the House for the first time in 40 years. And we had 12 bars without a pullback. We got a pullback, I guess 13 bars, and we got a pullback here on the 14th bar, and it resulted in sideways for 6 months. Yet, when a trend is this strong, it's unlikely to lead to a reversal. It's more likely to lead to a bull trend and higher prices. The pullback here, I don't know in terms of percentage what it was, 686 to 613. So, about a 20% correction, 15% correction. And that's kind of what I'm expecting here. I'm not expecting that much. I'm expecting more 5 to 10% over the next few months, something like this or a little bit like that. Can it keep going up like this? I don't think so. I think it's going to have a hard time getting more than another month or so without a pullback. And since the bars are 60, 70, 80 points tall, and if it goes below the low of the prior bar, that means it has to fall at least 70 or 80 points, and probably more like 100 or more. Stop entries today. First bar of the day, a doji bar. Second bar, a bull bar. And the bulls tried to duplicate yesterday, a doji and a bull bar. Gap up, doji, bull bar. Yesterday they closed the gap immediately. Today it took 3 bars to close the gap. But similar to yesterday, we had a doji and a bull bar. A doji and a bull bar. Here we pulled back a little bit. And bar 7 I thought was interesting because it was the second failed breakout above yesterday's high. Bar 2 tried to break above yesterday's high, failed, and 4, 5 tried again and failed. And therefore, it was a reasonable short. And if the bears take the short, they have to decide when to get out. To me, if I see a double bottom like we have there, if I take that short, I'm getting out above 10. It's a reasonable buy. As for bulls getting long, while I think it's okay to buy above 10, it's probably better if you're buying to buy above 23, because then we have a 1-tick failed bear breakout after bar 18. Small range, so you have to be thinking we probably have to get above the top of the range, and the range is only 3.5 points at this point. Chances are we'll get at least a couple points bigger, so 5.5 points, so maybe we'll get a couple points above the 6 high at some point today. And it looks like I think we got 3 points above. So the stop entry trades that I would consider, you can argue buying above 4 for an opening reversal and a high 2, high 1 above 1, and high 2 here. I would not. To me, we went up, we went down, we went up. It looks like more of a trading range open. So the first stop entry trade I would take would be selling below 7, get out above 10, and the first buy stop order that I would take would be above 22. And then I would not take any of these shorts. It's a small pullback bull trend. The pullbacks are only a couple ticks, and below the low of the prior bar, and the pullback from the high to the low, the biggest pullback is only about 4 ticks. And you're not going to make any money selling when the market's doing that. So either you're long or you're flat. Stop entry buy above 52, small high 2, high 1, high 2, and then again over here 71. Those would be the only stop order trades I would take. Buy the close, sell the close. Because of all the early reversals, it's one of those opposite days. So you look to buy big bear bars near the bottom and sell big bull bars near the top. So if you're really aggressive, you're buying the 3 close, the 9 close, maybe the 17 and 21 close, and then you'd be selling bull bars like 16 or 17 close, 14 close. I would stop doing that after the 1 tick failed breakout and the reversal up, because the bear's trying to get a break below the 18 bar range. The range is still small. The range is going to get bigger. While it's possible we could get a double top with 14 and 26, I think it's slightly more likely that we'll go above the high of the range and try to get at least a couple points above. This, you can argue buy the close, but it's not really typical. Buy the close. We're not getting consecutive good bull bars closing on their highs, so I would not treat it that way. And then 73, 74, buy the close, but the biggest breakout, 20 or more bars into a bull trend, is more likely an exhaustive end of the trend than the start of an even stronger leg up. And also we're right at the top of a channel, so it's a buy vacuum test of resistance. So I would not buy 73, 74, although the bulls who did were able to avoid a loss, especially if the 74 bulls scaled in. I would not. If it's buy the close end of the day, we get a bear bar, especially closing below its midpoint, like 75, I would get out. Even if I bought 74, I would get out. Limit orders, it was all limit order trading in here, but really difficult. It's hard to sell above 4. It's hard to buy below 7. Hard to buy below 12 for that matter, right? So the setups are really hard. Better, as I said, to either sell below 7, get out 10, and buy again above 22, and then decide whether to hold for 2 points or 3 points or 4 points. Limit order trading, we're going up here. The odds are we're going higher, and therefore you can buy the 25 low bidding against the reversal. You have a double top 14, but it's a double top lower high major trend reversal, 40% chance of a swing down, so it's a reasonable sell. I usually wait to see the breakout and then sell after I see 2 or 3 good bear bars. However, it's okay to take the short. It reversed up on 29, 1 tick, and then a terrible follow-through bar 30, but the odds are we're always in long. Odds are we're going at least a little bit higher, at least above the 5 high, and maybe a couple points above. And so for me, I would not take any limit order sell anywhere all day. Even though the bears who did sell above 62 made money, I would not. So for me, I'm just looking for an occasional limit order scalp. It took forever for a 2-point bull to get out here. And then once he's out, he has to decide what to do. Probably buyers below 59, even probably buyers below 56, but probably not going much higher, because at this point, we've already gone 5 points on the day, and that is an acceptable minimum. So there's less need to go much higher. Let me take a look at questions. Yeah, move this window around. I'm sure you don't see the window, but I have to take a look at it. how many trades have you taken today? I think I only took 3 E-mini trades. I took 1 Forex trade and 1 bond trade. So when the market is like this, I'm taking very few trades. But, I don't get upset. Years ago, decades ago, I used to get upset and say, oh my gosh, I'm not going to make my nut. A lot of traders call it their nut, their goal for the day. And now I just don't worry about it. I take what's there, and sometimes there's a lot of trading, sometimes there's not. And when you get these days with very little trading, I always think there's an increased risk of a blow-off, a climactic, huge rally that is the end of things for a lot of bars. A lot of bars on the daily chart, weekly chart, monthly chart. Okay, question: if a trader shorted below 22, let me see if a trader shorted bar 22 and got caught, what would be a good exit strategy? Okay, so he's saying if a trader shorted 21, the break below the trading range, and then he sees the close 21 above the bottom of the trading range, bottom of the triangle, and he also sees it's a 1-tick failed breakout potentially, and then he sees the bull bar closing on its high 23. So I think any trader who sold below 13, right, would get out 1 tick above 23 and possibly get long. That would be one of those rare situations when I would consider reversing had I taken that short. And because it's in breakout mode, and and I showed, I don't remember exactly when I showed the examples of the 1-tick failed breakouts. I hope I showed them pretty early over here, and I may have showed them early before. I hope I showed them before the breakout took place, but that was the concern that, let me go to, that's the concern. After you have 18 bars, breakout mode, and if you get a 1-tick breakout that reverses, you got to be thinking it's going to try to get above the top of the 18 bar range. 1-tick breakout, bar 18, and tried to get above the top of the range. Anyway, I think it's fascinating, and I think this is extremely bullish, at least near term, and not much downside risk. And there's a chance that we could have a climactic, dramatic rally, and then it becomes the top of the next many bars on a 5-minute chart like this. So a very strong rally, and then it just becomes the top for the next a lot of bars. Here we got trend resumption up, but it could lead to trend resumption down. You see that sometimes when the market is at an all-time high. Okay, sometimes it just goes up, very strongly. This is a 5-minute chart, but it's the same thing on the daily chart, weekly chart, monthly chart. Sometimes you get a rally like this, which is similar to what we have right now in the daily chart, and it just becomes the top for a lot of bars. You get a big correction down, or sometimes you get a parabolic wedge and an endless pullback and then a bear breakout. But here, very strong rally, and then it just dies, it just stops. Here, tried to stop here, but it did stop here. So right now we're doing this, and usually you're not going to go a lot higher. But no sign of a top, and not a lot of opportunities to trade during the day. I made a mistake, exiting at 2 points, especially, and I did not buy this one, but some, you make your best guess. Realistically, I thought, we already had 4 reversals. We had a new high, a new low, a new high, a new low. And in those examples, that's usually the most that you get. So after this reversal up, it was unlikely to go up to a new high and then a new low again. Once you get this new high, we've probably seen the low of the day. You could pull back and stay in the day's range, but, I should have thought more about it. The range was still small and probably getting bigger. And since it was not going to get to a new low, it had to get to a new high. All right, really strong, strongly bullish. No sign of a top. Accelerating upward. It's becoming a parabolic phi climax. We have a target a little bit above. We're almost there. That's based on this gap, but we also have a gap here. And if we go above this by a couple points, I'll move this line to here, and we'll start looking at a higher measured move target. But no sign of a top yet, and very, very bullish on all time frames, daily chart, weekly chart, monthly chart. So even when we do get the reversal on the monthly chart, which, as I said, we'll probably get in the next couple of months, even when we get it, it's probably going to be brief, 1, 2, or 3 months. And the best the bears could probably get is something like this, sideways for a few months. Okay, hope everybody has a good night.